watching famous Dave on YouTube.
Welcome back, friends, and we find ourselves today on the eve of the earnings report for GameStop GME. And when I look on my Thinkorswim, I can find some information on this just by going to the live news tab. So we can look at that real quick together here. Let's see if I can kind of move over a little bit. So I have the live news tab lined up on the right side of the page here, and so I can select live news, and then I can either link to my watch list, or I can just type in GME, but I just chose to link to my watch list there, and I'm going to go ahead and take this, detach the gadget just so we can see this a little bit here. So let's see what we've got. And by the way, I don't know if you remember way back during the pandemic was first starting, we were talking about Carnival cruises. Well, if instead of all of the trading and back and forth and stuff, if we had just bought Carnival and left it, that would have been a better trade than all the other stuff, the VIX and whatnot. Look how much Carnival has come back since the pandemic. Remember, Carnival was down, got a low. There was a low, it's showing here a low of $7. Let's see if we can find, yeah, low of $7.80, right? Now it's back to 27, right? So that is multiples. Let's call that 8. So let's say it's gone 4 times higher than it was. So we could have, instead of all the trading you've done, you could have just bought Carnival shares and left it, and you would have made more money. And of course, we see this kind of stuff all the time in trading. Oh, we should have, could have, would have done this or that. But anyway, let's get back to GameStop. So GameStop is expecting earnings of $1.38 a share. Now, if we look kind of back through, if we pull up GameStop here and we look back just on the chart here, it shows past earnings, and we see stuff like negative 53 cents, negative 140, negative 49 cents. And according to this article, GameStop usually has their best earnings of the year in the fourth quarter, and it is expected positive earnings coming out. Now, we've talked about this before, but if you're new to the channel or new to trading, earnings coming out in a stock is a very difficult situation to play, right? This earnings can come out way better than expected, and a stock can still go down. Or earnings can come out worse than expected, and a stock can still go up. You could know ahead of time what the earnings were going to be and still not be able to play earnings in a way that would make you money. It's exceedingly difficult thing to play earnings. That's why we generally tell people, if you have some sort of position on, maybe take it off for earnings and put it back on after, because you never know what is going to happen. And people who say they know what's going to happen ahead of time are engaging in wishful thinking, I would say. So right now, the valuation of GameStop with the stock around $200 is a $14 billion company. And the question is, with earnings coming out, do we think that it's going to be like a reality check? Like people are going to say, oh, right, this company is not really worth $14 billion. Should we sell it now that earnings came out? Or will things continue to go on a high note here where the valuation is through the roof, but there just aren't, people still want to own it and buy it, and it goes higher and higher? That is unknown information right now. What we do know is what's happened in the past. And, many people use technical analysis to try to take what's happened in the past and use that information to predict what's going to happen in the future. And for me, as a trader, this has always been a little bit of a kind of a questionable practice, because we don't know what's going to happen in the future. And trying to somehow reassure ourselves by by looking at charts and saying, okay, well, I can extrapolate that this is going to happen in the future. It's just unknowable what's going to happen in the future. Yes, we do try to make educated guesses and make money on those educated guesses. However, we never really know what's going to happen in the future. And I think for those of us who are newer to the trading game, the sooner that we recognize that the future is unknowable and that there is a certain amount of things out there that we just can't know, and becoming comfortable with the fact that we don't know what's going to happen is going to progress you as a trader. Because the new people that are new to this business, they say, and you see this a lot in GameStop because there's a whole bunch of new people that have just started with GameStop. You can tell when you look on StockTwits because these people have new accounts. They've just started out, and they're suspicious of people older than them. We all were young at one time, and we all heard our parents or whatnot, and we said, oh, they don't know what they're talking about. And there's a whole lot of that with people in GameStop right now saying, well, I'm going to be long, you guys don't know what you're talking about. And I try not to be a know-it-all. I try to help people out. For example, somebody just yesterday in GameStop in the chat was saying, before the open, was saying, wow, implied volatility in the options has gone way up. I'm definitely going to get out of my position. And this was at about 7 in the morning. And my response to this person was, the options are not open in GameStop. What's happening here is that you are, your computer is running these options, the closing prices from Friday, through an options pricing model. And the model, instead of evaluating these options based on the number of days till expiration from Friday, is evaluating them now, the same exact prices, but with an expiration a couple days sooner, because now we're on Monday instead of Friday. And thus, the same option price is going to show a higher volatility. If you take the same exact option and nothing else has changed except there's a couple less days till expiration, the price is going to show as a higher volatility. If you think about it, usually what happens is as we get closer to expiration, option prices go down. Well, if option price is frozen in time because the market's closed and days go by, that is going to represent in your model higher volatility. Now, this is going to be true on any option, regardless of the stock. And I tried to explain this to this person that no, implied volatility has not gone up. What's happened is the market is closed right now, and the models are pricing options differently because they are calculating volatility with less days till expiration. Remember, when we are calculating implied volatility, we're using a Black and Scholes or similar model that's going to take into account days till expiration, volatility, and things like dividends, interest rates, etc. And thus, any option that if you subtract the number of days till expiration, but everything else remains the same, across the board, every option is going to show a higher implied volatility. And this is a relatively basic concept of options trading that new people just might not have studied this yet. And somebody is incredibly willing to get into a quote unquote pissing match with me over this basic concept, just due to the fact that I believe that I'm older than them, maybe, or that or that I disagreed with them. It's this groupthink thing which is, the power of Wall Street bets and this group of people who, all bum rush a stock and make the price move higher. There's a lot of power in that, but there's also some negative aspects to that. And one of them is that people are told not to think independently, to just follow whatever the leader tells them, and that any negativity is FUD or is is contrary to everybody making money. So when I tell people, oh no, volatility hasn't changed, implied volatility of options is not going to change when the markets close. If nothing's trading, then prices are not moving, right? It's just the calculator is adjusting things differently. All right, so enough on that. So we are expecting for GameStop earnings $1.35, and once again, I just want to make the point that regardless if that number comes in, let's say the number comes in at $2, we still don't know if the stock will go up, down, or sideways. We just don't know what will happen in the future, right? Now, for me, I'm slightly short this, and I still am of the opinion that this is overvalued and the value will go down over time. Now, but I could certainly be wrong, and it could certainly go higher. The position I have on now is fairly basic. I'm long a diagonal. I'm long the 16 April expiration 165 put, and I'm short the March 135 put against it. So I'm long, once again, I'm long in April, which expires in 24 days. I'm long the 165 put. Right now, stock's 196. So this puts about $30 out of the money right now, $30 lower than where the stock is. What I sold against that is a put that's even lower, the 135 put in the front week, which expires in 3 days. So if we look at the option I'm short, it's trading around $7, and it will, unless we go below 135 in the next 3 days, this option will expire worthless, and thus I will collect $700. However, offsetting that is this option which I'm long, this April 24, the April 16 put, which expires in 24 days, which is trading around $39. Now, certainly there's some risk here because if implied volatility goes down, right now it's showing implied volatility 304. This seems to be going down every day, implied volatility. So the catch is this 165 option in expiring April 16th, is that decaying faster than the this March one that expires in 3 days? And according to the Greeks, to the Greek symbols which represent my risk, overall the March one should be decaying faster at a rate of $126 more a day than the April one. So if we look at the numbers in the Greeks here, we've got the April put, which is is decaying at the rate of $99 a day, and we've got the March put, which is decaying at the rate of $225 a day, so more than twice as much. However, it could be the case that implied volatility in April goes down a decent amount, and the April option starts actually decaying faster than the March one. Right now, the model is showing the March option decaying faster, but it is possible that volatility just comes in and the April one decays faster than the March. But either way, one option offsets the other, which is a nice thing. And the fact that I am bearish is reflected in the difference in strikes. The April option, which I'm long, is the 165 strike. The March option, I'm sure, is the 135 strike. Now, it seems kind of unlikely that we get through 135 in the next 2 days, but with earnings coming out, who knows? We could see this pop up $100. We could see it go way lower. My contention is that it's going to go lower. I have a small delta. I'm short 13, which is a delta is saying that like each dollar this goes down, I should collect $13. Each dollar it goes up, I should pay $13. However, these Greek symbols, once again, are kind of suspect just due to the fact of the nature of the position here, which is this diagonal. Now, changes in volatility are going to affect this April option a lot more than the March one. However, the March one only has 3 days till expiration, so it is decaying very rapidly. So we've got a position that we kind of know what it is, how it works, but these Greeks are subject to change at any time. that's kind of where we are on that. Now, let me talk briefly about the VIX before I let you get on with your day. Okay, so if we look at the VIX, we've finally gotten below 20, which took us quite some time, right? If we go back and look at 180 days on the VIX, we can see we had this kind of level here right around 20 that we kept sort of bouncing off of, even, right here, 21. And we seem to have finally broken through that level. Now, this is not a super significant level. Just because, the number 20 is there doesn't mean it's a super significant level. But in people's mind, 20 is kind of a big thing, I suppose. So psychologically, I guess it means something. We can see here, if we go a little farther out in time, that we continue to trend lower off of that high that came during the pandemic, of course, and we're still on the downside of the pandemic. Now, if we back this up to 3 years, we can see, the narrative is still coming off the pandemic. Now, the question is, do we get back down to these pre-pandemic levels or not? That would be like 10, 11, 12. It appears that we are headed that way. Will we get there, and how long will it take? We don't know. But things are looking up in the volatility sphere. Remember, the last couple years have been very bad for the short vol trade. We can see, we finally taken out the low from before the pandemic started in VXX. We know there's several factors which contribute to this decaying. And it's been a long time to come back. If you had sold VXX right before the pandemic, it would have taken you, months and months and months and months before you're actually in the green territory as far as making money. And if you had bought puts, you could have, your decay could have killed any profitability a long time ago. So we'll see if these products come back in track and what's going on with them. We are anticipating a split in UVXY. When UVXY gets below $8, $7, we start anticipating an announcement from the company of a split. And we have broken $6. So this is in people's minds. I actually did write a communique to the ProShares company trying to get information. It's funny. As a market maker trading, I was a floor trader for many years, and with earnings coming out, we actually would try, and it actually has worked in the past. I know it sounds surprising, but it has worked in the past to actually just call investor relations for a company and ask whoever answers the phone what earnings are going to be. Now, a lot of times, if you think of it from a company's perspective, there might be some new person manning the phones and that doesn't know any better and just blurts something out, and it has happened. It's not very likely, but it can happen, just calling into a company and asking them what earnings are going to be that they tell you ahead of time. So I figured it was worth a try to contact ProShares directly about the split. I feel like there's a little pressure on me to be one of the first people to announce the reverse split. I think I did beat Six Figures Investing last time at announcing the split, but we were within an hour of each other, and I just kind of got lucky. My friend Brent was joking about it on Twitter yesterday, who's going to be the first to announce the reverse split. But regardless of who announces it first, we are looking for the announcement to come very soon for the reverse split for UVXY. Now, this doesn't fundamentally change anything that it reverse splits. Remember, reverse split is just it's the same numbers. It's just changing them around a little bit, but it doesn't mean anything one way or another. As far as option wise, it can make it a little bit more interesting to trade just from a psychological perspective, but nothing fundamentally changes with a stock split. Usually the way I discuss stock splits that happen when you have a company that the price of the stock goes way up and then the stock splits, it can bring publicity to the stock. The news media will cover a split, and it can attract people to say, oh, maybe people hadn't been thinking about that stock, but they see the announcement of a split, and in their mind, they think psychologically that somehow a split means that the stock's going to move higher, and people rush into it. So we have seen that happen with stocks that split. However, a reverse split is sort of the opposite of that, and we don't anticipate it, psychologically affecting the market too much one way or the other. All right, so there you go. Thanks for watching. It will be interesting to see what happens with earnings in GME. I continue to stay short it. Let's see. What I'm saying is that it's illegal because I was going to open the short position. E-Trade put restriction on my account for no reason. I would say that if you read I know it's frustrating, KSE, when your brokerage puts restrictions on you. However, I would speculate that if you read the fine print in the E-Trade contract, like basically you have no rights and that they can do whatever they want whenever they want to. That's kind of what you sign when you sign the brokerage contract. And the other thing is that brokerages and individual companies are at the mercy of their clearing firms. Remember, when you're trading options, the Options Clearing Corporation ultimately guarantees all trades, and your clearing firm also guarantees all trades. What this means is that you want to have the integrity when you're trading options to know that whoever is on the other side of whatever trade you make is going to make good, and you are going to get paid if you make money. And due to this responsibility by the clearing firms and the OCC, they can do whatever they want to manage their risk, and they can tell you whatever they want to. So it's not like them restricting you trading a certain stock or doing whatever they want to your account. Pretty much everything is fair game with them, and you sign away sort of your rights when you start a brokerage account. And that's just, we all have somebody we have to answer to ultimately with finance, and that's just kind of the way it works. So I know it's frustrating when they limit things, but there's not a whole lot we can really do about it. All right, thanks for watching. Hey, what's up, Tom Hurley? What's up, KSE? What's up, Adrian? Did your pattern day trade or margin call them? They release it. Oh, I see. You're responding to KSE. Yeah, it can help to call them, KSE, and talk to them. Talk to someone on the risk desk. I think that's a good recommendation by Adrian. Anyway, best of luck, everybody, and I will talk to you next time. We'll see what happens with earnings here.
You're watching Famous Game.
Thanks for watching. Please consider signing up for Patreon. Leave a like, leave a comment, become a member. It's all very much appreciated. Thanks for watching. We'll see you next time, folks.